Hey traders from around the world, it's me, Jeremy Alexander Newsom with reallifetrading.com. What a day in the markets again. I keep saying that because every single day is a new day, and apparently we're just getting volatility, which is just going Gangnam style. SPY today had a very small gap down and then just kind of sank all day, very similar to the Qs. And as I mentioned just on Friday, we really should not close below Thursday's candle, especially anytime soon. And it looks like that could happen in the very near future. So if that does occur on the SPY, yes, I will start talking and having more of a slightly bearish perspective in the market. Not saying that we're going to go zero. I don't think the market's going to go zero. It's going to be pretty much never for that to happen. But I do think that there's a strong chance we make it down to the 100 simple on a weekly, and then most likely even a little bit lower, maybe even lower than back in February, just to make sure some people will really wig out, and then we bounce most likely. So if we trade down to here, something like this, and just everyone panics, then we get that nice bounce. Certainly possible. Will that occur? Time will tell. But today's candle is making me think that there's more of a chance that happens, especially since today is a Monday and we're getting all these gaps on a weekly chart. Now, speaking of, here's the Qs, and the Qs just all day rolling down. So the pink line was kind of what I was thinking was, I was like, guys, this is worst case scenario. I mentioned that back on the 14th of November, which I believe is Wednesday, on Energy Wednesday. I was like, all right, guys, if we do this, this is kind of rough. Today we did close below Thursday's low on the Qs. And not only that, but we're also completing this rest after battle pattern here on the Qs. So bearish candle, some bullish candles coming in. You got a, again, bearish gap down, right? A new black crow candle last week on the Qs. And then we've already broken the low of that candle. So to me, it's screaming not be bullish short term. I mean, again, long term, you have your time frames, you're buying the dips, long term perspective, you're finding some good spots to get in bullish. I get that, but right now on the Qs, I do think we're going to go lower. That's a really decisive candle today. And in fact, this was actually one of my favorite evening star reversal patterns. I did not personally do this trade, and I'll explain why in just a moment. But on the Qs, this was the perfect evening star reversal. I mean, 10 out of 10. If you're ever looking for an evening star reversal and you want to practice them, this is it. This is the best of the best. Can't get better than this. I loved it so much. So, again, even though I couldn't trade it, I still was like, hey guys, if you want to get in bearish here, this is where I would. This is why. So with this sell-off right here, nice sell-off, right, early in the morning. This is the retest. Good volume. Check out this bullish candle right here with volume. So the biggest bullish volume of the day comes in right here at 9:50 Central, so 10:50 Eastern. And then you got, notice where you're trading into. So you got the 10 and the 20 EMA acting as a resistance. So we close above the 10. You get the evening star almost a tweezer top. So you get this indecision bearish candle. Then you get the evening star pattern. Right? So this is your next candle. So notice, white candle, close of this candle is 164.88, open of this candle is 164.90, which means you got a 2-cent gap up. That's how you get the evening, the evening star pattern, if you get that little gap. And then this candle closed at 164.78. This one opened at 164.76. So you got a 2-cent gap down. So this is a perfect evening star pattern right here. Then the very next candle, you get this bullish inside day candle. And again, you're at that point closing below the 10, evening star pattern. If you take out the volume from this bullish candle, some people are going to be trapped, and that would have been an easy 2 to 3 hour trade. So if it was so easy, Newsom, why didn't you play it? Well, let's talk about it because I did play a phenomenal trade on Square today. Ticker symbol SQ. Still have that one saved. And here's the daily chart on Square. So the daily chart on Square, you'll notice in pink, I drew this back after earnings on the 7th. Mentioned I think this is going to be worst case scenario. Looks like that's exactly what's happening. Worst case scenario is playing out. The low of Friday was 69.94. We were opening pretty much right at that particular price. you got this kind of what looks like a flag pattern to me. So the last 4 or 5 days, we were kind of trading sideways, flag patterning kind of a situation. And we just had a small, kind of a cute little gap. So I just figured I would watch it. In the first 5 minutes, the very first 5 minutes, you got this ginormous bearish candle that came in. And that gave you all the bearish signal that you could want. And you had this very nice bullish high wave candle on a 5-minute chart. So it's like enter below there, stop above there. That was it. And that was pretty much instantly profitable. I mean, it triggered in and just never had any red at all, realistically. So within the first 10 minutes, we were up at about 2 Rs. So I did my best to hold this one. I didn't hold it long enough, apparently. Our target was 65.53, which was a 2.5 R target on Square. And even then, I mean, this purple line is the 200 simple on a daily. So if it didn't get out there, I would have gotten out the 200 simple on a daily. Obviously, it would have been phenomenal to hold it. That could have been a 5-6 R trade. But I really like the setup. Beautiful trade on Square. And that was a really big winner. So 2.5 Rs on Square. Then I played DGAZ this morning. And I'm actually quite happy about how I played this one. I played this one. Let's go look at. So here's the daily chart on DGAZ. So you had a black candle gapping down. And we were gapping to the support that we previously had from this candle, right? So we stopped dead in our tracks on that particular candle. And I was like, all right, I think this is going to fade. Maybe. So here's the 3-minute chart. And the 3-minute chart, if I turn the extended hours on, what we'll notice is, here's your extended moving hours time frame. I don't know why that's not in color. Let me go see if I can change that. Settings, time zone sessions, extended hours. Not sure why that's not showing up in color. Okay, no, well, it's all good. So anyway, here was your higher low pre-market right here. So we got a higher low, and then as it traded in right about here, you'll notice we were breaking above the moving averages. So we started breaking above the 10. My entry was 304 by 284, way down here, so 20 cents of risk. We traded up, we retested, that's where we got triggered in at 304, and then it popped. And it had a nice break. I thought this was the break of the pre-market high. I was excited about it. Came down, retested again. And then once this breakdown here happened, I exited DJZ at 299 for a 1/4 of an R loss. And that was that. No big deal. So loss on DJZ. So at this point in time, I was up a little bit more than 2 Rs on the day. And then Facebook, ticker symbol FB, believe it or not, for some weird reason, I did try Facebook long. And I'll explain the weird reason in just a second. Facebook, ladies and gentlemen, is just hemorrhaging right now. And it did the one thing on Friday that I mentioned it does not need to do, and it did it, which is get below the low of that high wave bullish candle. So this very, very strong, massively important bullish high wave candle, we got below that on Friday, and we did it with a gap down. White candle, gapping down, getting some people trapped. And then Friday had a nice long lower shadow. So nice long lower shadow, meaning people bought it. The low of this candle was 137.77. We opened at 137.61. So we opened below the low of Friday when tons of people went long right at the end of the day. You can see that nice little bullish move, almost a double bottom right there on Facebook on the last part of the day on the 15-minute chart. So we gapped below the low. Here's where we went long. And I did lose on the trade. No big deal. It could have bounced, but it didn't. This purple line, 134.12, that is the 200 simple on a weekly chart. So with Facebook trading down into these levels, went long over here, stop was down here, and we can see that it just did not roll over. Now that's when I was actually thinking of taking the Qs bearish. Right, so I was thinking about getting in the Qs bearish and having Facebook as a bullish trade, which would have been a really great hedge. And if you lose on Facebook, I would have lost an R and would have made 2 Rs on the Q, so it all would have worked out. So I lost an R on Facebook. That put me up like 1.25 on the day. But then I got stopped out of a Fitbit bullish swing trade that we had. And so this was a trade that I, did the best to set up. I thought I bought it at really good prices, even did it with half an R entry, trying to get in the pullback as low as I can. And yeah, I got stopped out on Fitbit for pretty much an R loss. And so the reason that I did not go bearish on the Qs was because if you take the loss on Fitbit, the loss on DJZ, and the loss on Facebook, all three of those losses were barely less than the gain that I made on Square. So since Square was 2.44 R's on the day, lost an R, a strong R on Facebook, lost 0.25 on DJZ, and lost 0.9 and some change on Fitbit. So with those three particular trades, I didn't have any other risk for the day, because if I lost that trade, then that means I would have gone from up on the day, right? Because we can see in hindsight that it worked, the cues worked. But had I got triggered in and it didn't work out, even though it was the perfect setup, I would have gone down on the day. My rules don't really allow me to go up on the day from being up to going down, because that's just pure noob status. Locking in a profit to going down on the day. So up a quarter of an R, which is a little bit saddening. But I still do have two swing trades out there that Blue Apron's not going to work. I'm going to get stopped out on Blue Apron at some point. That's going to be for a half an hour loss. I already did an add and reduce, got it set up. Blue Apron didn't really tank today, but I do have AAX in, and AAX in did start tanking, so that's good. So we're in bearish on this one, and if I can get 2 R's on this, that'll put me almost at 9 R's on the month, all things considered, with 2 weeks left. It'll be close, but trying to get that 10R goal in the month of November. Some great gaps, some beautiful movement out there. A lot of things are looking weak. Netflix looks weak. So Netflix closed below 288. I mentioned on this day, on the 13th of November, if we close below this high wave doji, do not be bullish on Netflix. So you got that close below it. And at this point, I think Netflix is going to trade down to the 100 simple. Another stock that I wanted to look at today was a fade that I missed. This one was brutal. XEC. So this was a really nice move. XEC was gapping down. And let me show you why I thought about fading this one. So this was a buyout. So XEC was buying out another company. I forget the name of the company now. It was an energy company. XEC, black candle gapping down. You can see it was gapping to a support. So I have my lines drawn here at one point in the day, but there was a support like here that I drew, and there was a support here, from these candles. So it was gapping into a support zone. But just that alone didn't mean I was going to fade it. I actually thought I was going to go bearish on it. Let me show you this 3-minute chart. So 3-minute time frame, if I turn the extended hours on, what you'll notice is the very first 3-minute candle was a bullish candle. And I was looking at getting in bearish here with the stop right there. That was literally going to be my setup. And obviously we can see that as I was looking at it, this candle wick came in, right? This giant candle came in, wicked in, and just blew through it. I was like, wow, if I was in that trade, I would have been stopped out. I would have been trapped. Plus, notice all this volume, right? Tons of bullish volume coming in. So I set up that trade to get in, actually, at this pink level with the stop below the wick. So I think our entry was 84.03 by 82.03, $2 of risk. So when this S-curve happened right here, like that, once it started making higher highs, I canceled the fade because it didn't trigger me. So no big deal. That was XCC. Let's go look at NVIDIA. And NVIDIA right now is pretty rough. Today is almost a perfect Maribozu candle. So almost without question, NVIDIA is going to go lower. And the thing is, I was talking about this one on Friday and pretty much mentioned that the first hour will and should dictate what the next 2 to 3 days on NVIDIA does. Personally, I thought it was going to fade higher and kind of fill this gap, but I watched it. Looking at the 15-minute chart, if you go back and just look at this pre-market, so here's the 15-minute pre-market, you can see that you're down, right? You know that you're down. You know that people bought. You can see that people bought on Friday. So you know they're trapped with this thing and this high wave candle right here, right? One of my favorite candles. Once it breaks that low, so there's another white candle coming in, there it is, and a break below that, you know it's going lower. That was the first 15 minutes, and then realistically, as I mentioned, the first hour should dictate what it's going to do, and you'll notice, beautiful move, rollover, Beethoven. Just a solid bearish rollover on NVIDIA today. And I was getting a lot of text messages in through here on NVIDIA about what should I do. I got some put sales. What's the plan? And my whole opinion on NVIDIA was, all right, well, here's the deal. If you're in bullish on NVIDIA with put sales or you got shares or something, buy puts because this is not a strong gap. Sorry, this is a very strong gap. This is not a good bullish chart. White candle, a bunch of buyers. It took out the low. You got the follow through. Normally with blue chips, you do get that follow through. And the chart on NVIDIA looks like death. I mean, that's the thing. I talked about that on Friday. But guys, this doesn't look particularly strong. You close below this hammer on a weekly chart. I get it. It's down like 50%, right? I totally understand. But just because something's down doesn't mean that it has to bounce. Remember, Netflix, if you want to go and really back trade something fun, go back and back trade Netflix on this 2011 pullback on a daily chart. So go and back trade this thing, because I'm not saying this is what NVIDIA is going to do, but I certainly am saying it is what NVIDIA could do, right? Netflix was at, I think, $300 a share before it split, and then it just crumbled down to like 60, maybe even a little bit lower than 60. And then it began to accumulate, and then obviously it popped higher and ran. And I'm not saying that NVIDIA can't do that or it won't. It probably will at this point, because once Netflix on a weekly chart took out this bullish candle, right? We closed below, and then we took out this bullish candle, and then we closed below the 100 weekly. What in the world's holding it up? So just keep that in mind with NVIDIA. As strong as the stock is, it still can make lower moves, and still, I mean, it was in just a tremendously strong bullish trend. Remember, we've gone from $26 to $280 in almost 3 years. All right, so do the math. It's a little bit of a bullish trend. So with this particular move, I'm definitely not saying NVIDIA looks strong by any stretch of the imagination. So again, if you're in put sales or you're in long-term shares, there's no reason not to have some type of protection. 136.94 is definitely the next target. That's the 50 EMA on a monthly chart. On a monthly. So yes, I do agree that earnings were good, guidance was good, everything looked nice, but this chart looks like death, and that pullback needed to happen. It was very, very far up there, and NVIDIA just trapping loads and loads of people. So anyway, that's just my thoughts. I do think it's going to continue a little bit lower, at least another 10 points down into that 50 EMA on a weekly. And then from there, it most likely should bounce or at least stabilize. But simply know that this is a bearish gap and go. And at this particular point in time, if you were long on NVIDIA at any level, think worst case scenario, because this is a damaging gap, strong move. And there's no real moving averages after the 50 EMA until you get to the 200 simple on a monthly, which is at 115. So could it get down there? Absolutely. Will it? I don't know, but plan at this point, worst case scenario on NVIDIA for the bears. All right, Apple also bearish today, down 4%. Big gap down. You can see in pink, actually I talked about this on Friday. This was a morning star reversal on Apple, and I really wanted it to go higher. Obviously it did not. My plan was for it to go higher into this gap and then potentially roll over, but you do have a bearish gap down on Apple. This was the 3-minute chart that I posted on Apple for some traders in the morning room, and it was a pretty easy limit sell, actually. So the first 3-minute candle was a high wave bearish candle, then you broke down, and I was like, okay, well, if you're looking at shorting it, look to do so off of the pre-market low. So there's this pre-market support right here at 189.40. That was obviously the limit sells, 189.40. Stop was just above the high of the first 3-minute candle. So if you played that and got trailed out, at least you made an R on Apple. But at this particular juncture, decent gap down on the hourly chart. We can see that we actually are making lower lows. So we have made lower lows, we have made lower highs. So at this particular point in time, again, if you're in bullish on some shares long-term on Apple, there's no real reason not to have some protection, because today is a one black crow, new black crow candle. And if we make any additional lower lows on Tuesday, which is entirely plausible, we could easily keep going lower. There's no, this is a nice retest, right? These 2 days right here. This is all it needs. So if it breaks down, I'm just saying it can continue lower, and I would look for this gap to start getting filled on Apple. If you want a little bit more bearish sentiment, remember this island reversal pattern up here on the 31st and 1st of October still has not been filled. The last time that happened on Apple, the last time we got an island reversal was back over here, and this was July 2015, And this was on earnings. We gapped down on earnings, good earnings, and then we rolled over, broke the 200, which we are doing now on Apple, retested the 200, and then made this ginormous move down. I'm not saying this is going to happen, but I am saying that mathematically in the past, when Apple did sell off after this island reversal, from the, let's just say the open of the gap down to its lowest move, it sank 22%. Again, not saying Apple's going to do that, but I never know what anything's going to do. All I can do is say what it might look like it's doing. And at this particular point in time, Apple's down only 11% from that gap, from the open of the gap after the island reversal. So I think we have lower moves to go in Apple. Make sure you protect yourself with some protective puts. Things are looking a little bit weak. So Facebook looks weak. I talked about Facebook, but Facebook closed below the 200 simple on a weekly chart, my friends. This is not strong. This is a retest gap on a weekly, so I could easily see another day or two at some point on some juncture where Facebook retests the 200. But at that particular level, I mean, it's never hit the 200 simple on a weekly before ever. So it closing below there on the first shot at it is a little bit on the weaker side to me. So again, I know all of you know how to make money when the market goes down or you have some bearish moves. I'm not saying the market's going to go to zero. I'm not saying we're going to have a cataclysmic just 45% drop. What I am saying is there are certainly some signals that you're going to want to be in some protective puts or some puts or long puts. Be in them just in case. Because again, the cues, the fact that it closed below this Tuesday candle and you got that inside day candle yesterday, we've already taken out the low of Thursday. And again, on a weekly chart, you got this rest after battle pattern, one black crow. It just seems a little bit weak to me. Now, the unfortunate news is the markets are closed on Thursday. They also close early on Friday, and I am in the trading room tomorrow all day. So if you want to day trade with me, hop in. I'll be there. But real life trading is closed on Wednesday, Thursday, and Friday. We might continue to get some sell-offs in the market, even if it is with light volume or lower volume. That certainly can happen. If we get an inside day candle tomorrow, or if we gap down tomorrow, we're going to continue. But we'll see. I'll be in the room tomorrow. Let's make money together. I'm up on the day. Let's continue to protect ourselves. Trade what we see, not what we want. Let's just create our plan. See, this is what I see in front of me. This is the analysis. Look through the candlesticks. Let them tell you the story and play it appropriately. All right, team. That's it for me. I will be back next week for another free stock review on Monday. However, I will be sending out some more free videos and some more content for you all. But I'll see you a week from today. Whew. Let's do it, folks. You rock. Love you all. Bye.